Nike's earnings will hit after the close today, and the street is a little nervous on how things panned out for the sneaker giant. Company is still dealing with supply chain snags from the pandemic, mixed demand in China, and new inflationary pressures. Camilo Lyon covers Nike at BTIG and joins us now. Camilo, always great to get some time with you. Look, Foot Locker, a couple weeks ago came out, reported the stock was absolutely battered into the ground. Is that a potential tell on how Nike is going to report later on?
No, and thanks for having me, Brian. It's good to always speak with you. No, I wouldn't take a direct read from Foot Locker to Nike. Really, Foot Locker's results were effectively promulgated by Nike's actions. So that's to say that Nike has effectively made a much more definitive turn on focusing on its direct-to-consumer business at the expense of Foot Locker. So, the contacts that we have in the space and the conversations we've had with those industry contacts really suggest that the issue that Foot Locker is facing is one of less Nike product to the benefit of its competitors, as well as to Nike's DTC, as opposed to a demand issue for Nike. Now, that's not to say that there aren't other issues that we're on the lookout for with respect to Nike here in the near term, but we don't take a read-through from Foot Locker's results as a negative view on Nike.
Yeah, I know there's a lot to say about what's going on in China, but I have a bigger picture question first, Camilo, and this is based on anecdotal information. I went to a bat mitzvah last weekend, and I would say 80 to 85% of those 12 and 13-year-old girls were wearing a little black dress and Air Force Ones. And I've just been sort of amazed by the popularity and demand for Nike over a longer term as a trendy shoe. And I'm just curious how long that kind of cycle can last, because it's lasted already for quite a while.
Yeah, 100%. Again, the situation that we find ourselves in with Nike and really a lot of the stronger brands today is not a demand issue. It's really more a supply issue, or that's what it's been for the last 2 years. Now, we do have new pressures on the consumer that we're all trying to figure out the duration of, like inflationary pressures, rising rates, and the like. And rising prices pretty much across the board, which Nike is going to do in the back half of this year. But by and large, this has not been a demand issue, and Nike has done an incredible job over the course of its history of creating demand for its products. Now, that's also been propped up by a relative lack of supply in the market too. So again, it's not really a demand issue, nor a style or on-trend issue. It's really more the supply component that really keeps us up at night, at least as it pertains to the North American market.
Camilo, what do you make about some of these competitors? We just talked to the folks over at On Holdings. They seem to be having gained a lot of good shelf space at major retailers. They told us their pipeline for the spring selling season is strong. Should Nike worry about them and other upstarts like it?
On is an interesting company. It's one we don't cover, but we track it because we do cover competitors of On, like Hoka, that's owned by Deckers. These brands that have created some shelf space and some really hot attention for themselves in the running category, doing well, and bring forward a new view on the technology with respect to running. Again, we're talking two very different scale comparisons between Nike and an On or a Hoka. And so we're not really dismissing the competitive environment, but we're also not really concerned with it too much because Nike does have this brand halo above it that casts a much wider net than the other competitors around it. Now, the other thing, too, that's an interesting point to call back to is that the interesting stat when we talk about Nike running is 95% of the consumers that buy Nike running shoes do not use them to run. They use them for more aesthetic, casual purposes, everyday purposes. So when we're talking about On or we're talking about Hoka, we're really talking about more technical running footwear. And again, so that creates another point of distinguishing separation between it and Nike.
Yeah, that's a really good point, Camilo. I want to come back to supply chain for a minute because, as you say, the scale is very different. But one other thing that stands out about On is that a lot of its supply chain goes through Vietnam. And I wonder, when you're looking at the supply chain issues for Nike now, what does it need to do to tweak its supply chain? Does it need to get more diversified, for example?
Well, diversification has been happening for years now, and that's come at the behest of its manufacturing partners, a lot of whom are Chinese businesses that have diversified outside of China, largely due to labor pressures that have been pretty systemic and structural in nature for the past 5 or so years. COVID has exacerbated issues from a production perspective, but remember, to use the On example, we're talking about Nike being a battleship and someone like On or Hoka being speedboats. So the time it takes to turn those businesses around is very different from a production perspective. I do believe that Nike is exploring other countries to ramp up and have redundancies in. That's the info that we get and the intel that we get from our contacts in the manufacturing community. But again, those are longer term initiatives. The scale that Nike produces at, we're talking hundreds of millions of pairs of shoes annually. So it doesn't happen overnight. Factories are tapped to build out lines and to build out the expertise that it takes to create these shoes does take time. So there aren't really tweaks that can happen overnight. These are longer term initiatives that will happen over the course of years, not months.
So finally, I want to bring it back around to the earnings, because you say in your note, looking ahead to the numbers, that you think China sales fell 15% last quarter and that could be too optimistic. Talk us through that and whether you think that's the biggest downside risk here.
Sure. So if you recall, last quarter that they reported, China sales were down about 25%. And the company guided to a sequential improvement quarter to quarter to quarter. So that means less negative as we proceed, and the company is able to advertise more and get better product into market. Now, the contacts that we have in market still are pointing to high heat product that's sitting on the shelf. So that to us suggests that the pace of improvement of our down 15 from what was down 25 the prior quarter could be too fast. So that's a downside risk that we see to our numbers. Again, I think a lot of this is due to the COVID-1 policy in China that really is restrictive and has hampered retail traffic into stores. And so that could be a very bumpy path to returning to growth. A lot of the things that we see as headwinds today for Nike and for the next quarter or so really don't start to turn into tailwinds until the back half of the year, China being one of those regions.